Hello traders and welcome to another video review. Today is Friday, March 14th, 2025. Let's find out what do we have on the economic calendar for today. Not many news during the overnight data, but early London session welcomes us with GDP data release from the UK, and that's worse than expected number, minus 0.1% versus the forecast of 0.1% and the previous number of 0.4%. Industrial production down minus 0.9%, forecast minus 0.1, previous 0.5. Manufacturing production minus 1.1. Again, everything here looks bad. So definitely take a look at the the UK data. German CPI in line with the expectations, 0.4%. We are still waiting for the trade balance non-European countries for the UK. CPI data scheduled for release from the Eurozone. French CPI, Spanish CPI and Polish CPI are scheduled for release between 8:45 and 10 o'clock. Then we slowly enter the New York session. Data from the Canada, manufacturing sales and wholesale sales are scheduled for this at 1:30. Michigan 1 and 5 year inflation expectations, consumer expectations, sentiment, all of this is scheduled for this at 3 o'clock. At 6 o'clock we got US Baker Hughes oil rig count and total rig count, and that's about it. So very slow and very easy in data, very US session. But the London session this time is a little bit busier than the US session. Without any further ado, let's take a look at the charts. We start with euro-dollar. So the euro-dollar is coming off the highs at 1.0918 when the technical level in form of the technical resistance was hit, right? So now we pull back lower towards the yesterday low, which is seen at the level of 1.0823, but still there is nice technical support at 1.0766, which might be a target for the best. Momentum wise, we're coming off the extremely overbought conditions now. The hour size at the level of 46 points. The market is definitely under the bearish control, and the bears are pushing prices lower. Just as expected, correction is still taking place on euro dollar. The outlook remains negative in short term. British pound, after the very bad bunch of data, is noticing the movement to the downside. So we are going back. Let me just place the technical resistance, 1.2988, basically 1.30, almost 1.30. As I said many times before, that will be the target for the bulls. After hitting 1.2988, the market comes down towards the 61% Fibonacci retracement just again, but I don't think we need it anymore because it was retested many times. But this pin bar here is telling us supply is coming to the market. The bears are in control of the market. Let me just zoom out just a little bit and make it a little bit smaller. There you go. So what now? Basically, yesterday's low must be tested. So it looks like this level here, 1.2920, will be tested soon, or it is tested right now. Then eventually the level of 1.2912 will be tested and might be violated as well. And when we break below this level, the next target is 1.2860, and we are back inside of this channel. So 1, 2, 3, 4. Well, we might say that this is the ending diagonal, but it's clear for some of us that, where is my arrow? There you go. This pattern here is there you go, towards the big pin bar. Okay, it is what? Yes, exactly, it is a bearish divergence between the momentum and the price. So usually the price is lying, right? So it's moving higher in our situation on lower momentum, which is unsustainable. That's why now we hit the level of 49.70, which means basically that we are testing the neutral level on the RSI. So any breakout below this technical supports means that the market enters negative sentiment zone. Negative momentum is the dominant momentum on the market, and lower levels will be seen sooner or later. British pound, if there is a breakout below support, has the bearish outlook in short term. Okay, let's take a look what is US dollar to the Japanese yen doing, because we have a bulls that are waking up. What they do, as usual, when we test the important technical support like 146.51, we have a small pullback back into the zone. In our situation, this is the supply zone. Then we have another pullback, fine, and then again we are back to test the supply zone with nice, strong, positive momentum. Nevertheless, it might be quite difficult for the bulls because we got 100 periods moving average just at 148.99 and the supply zone. So breakout above both of them is very bullish. We might even see the test of the trend line. Okay, so keep an eye on the situation here because it looks like the bulls are trying to do something here, trying to rally higher. Let's take a look at the gold market again, because we got new all-time high on gold. The gold hit the level of 2,993 after breaking above this consolidation zone, testing the demand zone, breaking above the consolidation zone. So right now we can see that the new all-time high was made just under the $3,000 mark, and this is the situation when the market conditions are extremely overbought on the 4-hour time frame chart, so it needs to cool down again a little bit. Every of our technical resistance level, old technical resistance level, will be now a support. So for example, this level here, 2,954, must be tested soon to confirm this breakout is valid. What is a little bit concerning is that for now this is only 3-wave movement, right? So we got the wave A. Let me just show it to you guys. Elliott wave. Let's take the Elliott wave, ABC, right? So we got only okay, we got only 3 waves. Let me just take the impulsive wave. Maybe that would be better. Okay, now we got only wave, let's say wave 1, wave 2, and that's a wave 3. So if we pull back below the wave 1 high, then the outlook is very, very bearish for the gold in the short term. But if we do something like this, that's a completely different story, because we have a full 5-wave impulsive cycle to the upside made. So please keep an eye on the gold these days. And the Bitcoin. The Bitcoin doesn't do much these days. It's still below the 100 periods moving average, below the orange trend line, below the blue trend line, below the technical resistance, 84,500 and 84,600. This resistance was tested. The bulls didn't break above this level. They pulled back again, and now we start the consolidation here inside of the zone between the lows of below the lows of 76,562 and the technical resistance at 84,600. So the outlook for the Bitcoin remains sideways to bearish as the market stays below the trend line and 100 periods moving average. So it doesn't actually looks like this is the multi-year low here on the Bitcoin, and now we only go up. No, nothing like this is apparently happening here on the Bitcoin. We still have the key demand zone waiting to be tested. So it looks like all of these bounces here are just temporary, and we will see the lower levels sooner or later on the Bitcoin. So the short-term outlook for the Bitcoin is sideways to bearish as well. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.